So we'll put it on our YouTube channel. So far, so good, right? In this accounting software, we've covered a lot of things, right? We've looked at the overview. I'm just trying to refresh our memory, the overview of the Zohobooks, right? The dashboard, where you can see the receivables, that's the amount the customer is owing you on your invoice. The payables, what you are owing the suppliers on what they supply you. You can see a graphical representation of your cash flow. When we say cash flow is what comes in and goes out of your business, the inflow and the outflow in terms of revenue and expenses or any payouts. Then you look at income and expenditure, your revenue and expenses. Then we've talked about the bank, registering for bank, right, for your business. So we've touched on that. So that's on the overview. Then we've looked at the inventory aspect of the Zohobooks, right? The inventory is alongside the books, because there's no how your books can be in order, accurate, if your inventories are not set up and they are accurate as well. So we've touched on that. And we've also looked at banking, like I said, creating banking that the business is using so that all the payment that comes in and all the revenue, the expenses, you can post them accordingly to see the position of your business. I know we have also, looked at sales. We've touched sales as well. Yeah. So in the sales aspect, that's where you can register your customers. You can see customers here. Then you can do your invoice to your customers. Then if you cannot be doing the customer one after the other, if it's a company like a supermarket that customer goes and come in and all of that, you can use sales receipt. In that sales receipt, just pick up your products and then it will fetch it out for you. You can do the invoice, the customer make payment, you give it to the customer. And then later you can register the customer into your business. Then I know we've also touched on purchases, right? We've touched on purchases and we said that purchases is when you want to buy from your customer, you can create a bill of what you want your suppliers to supply you for the business, right? And then you can now make payments for that bill once the payment has been made to the suppliers. Today, we'll quickly look at the chart of accounts. So let me quickly take you there. So you see the chart of accounts on the accountant's menu. I believe you can still see my screen. Please quickly confirm.
I can see your screen, sir.
Very well, good. So you can get the chart of accounts from the accountant's menu of the Zohobooks, right? You will see that under the accountants, right, we've done manual journals there before, right? So part of what we have in the chart of accounts, in the accountant is also chart of accounts, right? So I'll click on the chart of accounts. Let's move on. So I want you to understand something quickly. That chart of accounts is general ledgers for the business. You remember when we first started, I walked you through the process of accounting. Told you that accounting begins from source documents. That's financial transactions, where you have your receipt, your invoice, and other source documents that you get for your business. So that is the source document of financial transaction. And I told you the second stage is journals. And journals is when you record all those financial transactions in a chronological order, in a well-arranged order. That is journals. Then after the journals, the third stage is ledgers, right? I told you that the ledgers is the principal book of accounts, is the main book of accounts. It is the account itself. So anything that goes on in your business, just know that it is a ledger. If you have GT Bank account for your business, it is a ledger. If you have Zenith Bank for your account for your business, it is a ledger. So each of your bank accounts that you use for your business is a ledger. If you incur an expenses on fuel, telephone, internet, each of them is a ledger. Do you understand that? And that is what we are considering today, the chart of accounts, which is the ledger of the account. So let me quickly rush you down to the stage of account. The first stage is the trial balance. When you have all your ledgers, right, everything will now come into the trial balance, whereby you have your debit side and you also have your credit side. And at the end of the day, the trial balance must balance. And when you have your trial balance that is in order, you can prepare your final account, which we call financial statements, right? Let's quickly move on. So as you can see from the screen, these are ledgers. So this is an accounting software, right? It comes with an automated ledger, a ledger that is already there before, right? So when you have the ledgers that is already there in the accounting software, then you can now audit the chart of accounts, because there's nothing you cannot audit. You can audit your chart of account, you can audit your inventory, you can audit your non-current assets, you can audit your bank, you can audit anything. So the audit means that you need to check, examine each of the chart of accounts. Is it suitable for your business? Is it suitable when you are doing your posting of debiting and crediting? So that is the need why you need to what? Audit your chart of accounts. So let's run through what we have here in the chart of accounts. The first one here is sales to customer. And under the type of account here is what? Other current assets. Sales to customer, cash. So when you sell to customer and the customer make payment into your account, right, it will be a current asset. Remember, I gave you rules of trial balance. If you can still remember, there are 4 rules generally, and it is broken down into different phases. The first rule and the second rule is for you to credit all sales, credit all liabilities. The third and the fourth rule is for you to debit all assets, debit all expenses you use, right, that you have available to use in your business for a period of 1 year. And when we say asset, asset is what you own, what you have to use, right? Then we also have non-current asset. Non-current asset is an asset that you have to use in your business to generate income, to generate revenue, to generate profit that will last you for more than 1 year. When you have motor vehicle, you have land, you have building, you have furnitures and fittings, you have office equipment. All those things are non-current assets. And non-current assets, you do what we call depreciation on it so that you can claim capital allowance in lieu of that depreciation for tax purposes, right? So that is the first ledger that we have here. So we are trying to audit all these ledger to see if they are suitable. Then we have what? Cooperative savings ledger. So if you have savings, when you are running a cooperative for your business, it is a current asset as well. Advanced tax. This advanced tax is usually used for withholding tax. So withholding tax is a tax that you deducted at source. So when you send invoice, right, to someone you want to do business with, maybe a company that you want to do business with, maybe you want to do a contractor work with them or anything, right? So they will do withholding tax on your invoice, and that withholding tax will serve as a credit for you, which the ledger name is what we call advance tax. Do you get? Because you are going to use it later to reduce your tax liability when you are filing for tax. So it is a current asset. So we look at employees advance. Employee advance. When you pay your employee in advance, we are in the month of September now, and you have paid your employee, right, for October, for November, for December, employee advance. It will be a current asset to you, so that by the time the month now comes, right, you can use it to offset your employee's salary. Do you get? You will not be paying your employee again for any expenses. So it's a current asset for you. Let's look at the other one. Prepaid expenses. Let's use electricity for example, right? Especially let's say you are using prepaid meter. You are using prepaid meter. So you have loaded, right, a card of like 100,000 into your prepaid card, right? And you have not used it. So it will be like a prepaid expenses. You have paid it upfront, but you have not used it. It's a current asset for you. Then undeposited fund is that one that we have been using that to serve as a replacement for your bank if you have not, registered for the bank into your business. So undeposited fund in a way can be going there, but definitely you are going to move it to your normal bank when any payment or transactions come into this undeposited fund. You can see that it is a cash and it is still current asset in a way. Look at petty cash. Petty cash, if it is positive, it is a current asset. Look at bank. Bank is also a current asset. So any bank that you have at all is a current asset. Then when you are registering for the bank, then you can now put the name of that particular bank. Then we have account receivables. When you send invoice, can you still see my screen?
Good afternoon, sir.
Yeah, good afternoon. Welcome. You can unmute.
What is that? I'm having network. I'm having problem network here. That is why, sir.
Sorry about that. There's no problem. You are welcome.
I've used my phone to join. My laptop is not working for it again.
No problem. Just keep learning, right? Let's keep together. You are welcome. So, Caleb, confirm. Can you see my screen?
Yes, I can see your screen, sir.
Okay, let's go on. So we are trying to what? Audit all these chart of accounts, right? To see what they are. So for the suitability of our business. Then I was giving you explanation on this accounts receivables. Accounts receivables is the money that you're expecting your customer to pay you on the invoice you have given them. So it's also a current asset, right? Then furniture and fittings. Furniture and fitting, or furniture and equipment, they are under non-current asset. Anywhere you see fixed assets, right, the proper name for it is non-current assets. Plant and machinery, non-current asset. Generator, non-current asset. Office equipment, non-current asset. Computers, non-current assets, right? So each of them are ledgers, right? Chart of account. Then tax payable. When you are owing for tax, it is a current liability. It is a credit account. Unearned revenue. Customer have paid, but you have not actually delivered the products or services. You have not really earned that revenue according to IFRS 15, right? So you have not earned that revenue. That is why it is called unearned revenue, and it is a current liability. You are going to pay it if you don't eventually deliver the product or the services. Opening balance adjustment. This one is just to adjust the trial balance at the end of the day. So it is usually a current liability, which will be, cleared out at the end of the day to make it a zero balance, right? No figure supposed to be in this opening balance adjustment at the time you are preparing your final accounts, right? So we look at employee reimbursement. When you are meant to reimburse your employee, maybe they have used money for the business, maybe for transport, to buy subscribe to internet or anything on behalf of the company. So you are going to reimburse them at the end of the day. So it's a current liability. Accounts payable. When you are owing your supplier for what they have supplied you, you are going to pay them at the end of the day. So it's a current liability for any amount that is here. So hope you are getting all the explanations so far.
Yes, sir.
Thank you. So let's move on. Then we have dimension adjustment. So this more like look like all these opening balance adjustment. So it is still under current liability. So you must not have any balance in all these adjustment whatever at the time you are preparing your final account. Retained earnings. Retained earnings is under equity. Equity is what the owner has in the business, right? So this one is usually a credit account. Do you understand? So we have owner's equity as well, what the owner has. So this retained earning is the cumulative of all the profits that the company have been able to make year in, year out. So it's still an equity. So we have the owner's equity as well, the amount of money that the owner puts into the business. Then we have opening balance offset, more like equity as well, but we must not have any balance in this opening balance offset at the time of preparing the final account. Then we have drawings. Drawings is what the owner will draw for personal use in the business. If you withdraw money out of the business for personal use, it is called drawings, and it is also an equity, what you have in the business, what you use, what you have. Other charges. Other charges could be in form of other money as revenue that comes into the business, right? So if your business is into sales of beverages, bonfita, drinks, all of those things, right? They are your normal sales income revenue. But if you generate another money in that business that is not usually from the primary source of the business, it may be called other charges, right? Maybe you charge for transport, you charge for logistic or other things. So it can be generated as other income. Sales, what comes in as revenue into your business, it is income. It is a credit account. So anywhere you see income, sales, profit, whatever, is a credit account. Then we have general income. General income can be any income that flow into your business, but not necessarily from the primary source of the business. It is also a credit account. Interest income, the interest that you make either from investment, from your bank, maybe the money you have and you generate interest and all of that. So it is a credit account. It is also an income. We have late fee income. Late fee income, from the word late, right? You charge for the lateness of your invoice before it comes in. So you charge for it. So it becomes an income for you. Discount. Maybe you have discount. We have different type of discount. We have discount receipt, right? When you receive discount from your suppliers on the purchases that you are supposed to pay for, the suppliers reduce the payment for you by maybe 20%. It will serve as an income for you. Then we have discount allowed. Discount that allowed is an expenses, so it's a debit account. Shipping charge is an income. Lodging is an expense. Maybe you lodge in an hotel, you travel for business purpose, right? And you lodge in an hotel, so it's an expenses. Purchase discount, right? So it's an expenses. Right? This, right, for Christians, right? You have to pay tithe and offering from your business, so it's more like an expenses. Transport expenses is a debit account. School fees expenses is a debit account. Office supply expenses is a debit account. Money, advertising and marketing and expenses is a debit account. Pension expenses debit account. Bank charges and fees expenses debit account. Credit card charges expenses debit account. So you can see automobile expenses, parking expenses, IT and internet, rent, janitorial, postage, bad debt, printing and stationery, salaries and employee wages, professional examination expenses, uncategorized expenses, meals and entertainment, depreciation, waste disposal, consultant expenses, repair and maintenance, other expenses, electricity, cost of goods sold, exchange and gain or loss, inventory. Asset is an asset, is a stock. So you can all see that we've been able to walk through these ledgers, and it is definitely suitable for the business, right? But then, how about if you have transactions that you need to now post, but the ledger is not here and you need to post? What do? You create new. Come to this new, click on it, right? So it will bring you your create account. Create account means you want to create a ledger that you are going to post into. So you now ask yourself, this transaction I want to post, you will analyze it. Is it an expenses? Is it an asset? Is it an income, sales? Is it an equity? Is it a liability? The rules of trial balance I gave you is to give you a picture on how you are going to post for that transactions. So now you will see from here account type. What account, what ledger is it? So it will give you in the drop down menu, click on it. So the type of account that we have other assets, we have other current assets, we have cash, we have bank, we have fixed assets, we have accounts receivables, stock, payment clearing account, input tax, intangible assets, non-current assets, deferred tax assets. Then we have liability. All this one is under assets. Then we have other under liability, other current liability, credit card, non-current liability, other liability, accounts payable, overseas tax payable, output tax, deferred tax liability. Then we have under equity. So when you click on equity, you now specify which equity is it, then you create the account for it. Then we have income as well. Which income is this? Is it from your sales income or other income? Then expenses. We have the expenses. Type of expenses. Is it the normal expenses like telephone, internet, transportation, fueling, electricity, or is it an expenses on cost of goods sold? Cost of goods sold. So you must be able to specify it correctly. Then we have other expenses that is not within the normal, regular, and cost of goods sold. All right. So let's assume that we want to create for under assets. If we want to create for under asset, an account that is an asset, right? You will now like, what is this transaction? Is it that we purchase fan? If you purchase fan for your business to use, maybe there is heat in the office and the fan that is available there will not be able to satisfy the ventilation to reduce the heat of the, you can now buy another fan. So when you buy another fan, it will be under this fixed asset. You click on fixed asset because a fan is what you own to use in your business, and you can use fan for more than a year. That is why it is called fixed asset, but the proper name is non-current asset. So you click on that when you have analyzed the transaction of that particular transaction you want to post. Then you now give it a name. What did you do? Fan. Right? The name is what? Fan. And of course, fan can be under office equipment, right? Fan can be under office equipment. But for you to be able to track the specific asset that it is, you can leave it as what? Fan, right? You can now like, maybe is it standing fan? Is it ceiling fan? Is it wall fan? You can specify it here, right? Standing fan. Then maybe it is aux. You can just put it in brackets, aux fan, right? Then you can code that fan, right? You can code it to track that fan accordingly. Maybe you can now say, if it is Tosjohn, you can now say TJN SS002. You can use that, right? This is just an example. You can use it to code it. And description, purchase of fan for office use. You can put it there like that. Zoho will now ask you, Zoho expenses, show as an active account in Zoho expenses. Do you want to show it like that? But then this is an asset, right? We may not need to show that. Just click save. You can see When you click on save and you come back to the chart of accounts, let's see it. Instead of looking for it one by one, you can just put standing fan on the search. Standing fan. Let's see. It will bring it out for you. You see it? No, it's not still showing us. Let's try to refresh it. Refresh it and see. Since we have saved it, we're supposed to have it. Since we have saved it, supposed to have it. Let me go back. Let me come back. Go down a little. Oh, sorry. See the name. We have missed the letter. So let's click on it and try and edit. Let's edit the name properly. That's why it did not bring it out when we search for it, because the name was not correct. So you can see now. So it will bring it out in the chart of account. It will add it to already ledgers in the chart of account that we already have. So now these are ledgers. So you can create as many ledgers as possible, right? So you can see if it is asset, click on it. If it is cash, click on it. If you are creating for bank, let's say for example, let's create for bank. It's still under asset. You put the name of the company, Tosjohn Consulting. Then which bank? Let's say Zenith. You specify the bank, Zenith. You can code it as well. You can put the account number as well. Then when you do that, you do what? Save. You can see now that it is here, right? So you can create as many things as possible and create, but just be sure of which account you are creating. Is it under asset? Is it under liability? Is it under income? Is it under equity? Is it under expenses? So you must be able to what? Specify it correctly. Specify it correctly. Do you understand? Yes, I believe you understand. I believe you understand. So that is how chart of account works. That's how chart of account works. You look at your chart of account. Are they in order? If they are not in order, audit it. If you have audited it and it's suitable for you, fine, you continue to use it. If there are other ledgers that are not there, you can now what? Create a new ledgers and it will come into the chart of account. So summarily, chart of account is the ledgers, the general ledgers of your business, all the transaction one after the other specifically that go on in the business. So at the end of the day, all this ledger that you have, if you have transactions there, if you have posted there, then you will now see it in your reports. When you come to reports, you know, I told you that from transaction, financial transaction, that's a source document, we have journals. From journals, we have ledgers, which is the general ledgers, the chart of accounts we have been talking about since. Then you have your what? Trial balance. So the trial balance will now bring in all the ledgers. So you come to reports and search all the ledgers. So you look at it. all the ledgers, all the one that have transaction, it will bring it out for you. You can see them: debit, credit, debit, credit, debit, credit. You can all see them: debit, credit, debit, credit. At the end of the day, it's what? It will balance. Trial balance will what? Balance. And it is this trial balance that you can now use to prepare your final account. You use the ledgers, you use the trial balance to prepare your final account. So when you look at this place, let's overview under the reports, see as many reports that you can generate: cash flow, profit and loss, balance sheet, business performance ratio, forecasting, movement of equity, sales by all reports at all. You can always generate it from your reports once all your postings are in order, they are correct, right? So that is the beauty of using accounting software. It connects to every area, every ledgers, every leg of the business, and you get your report seamlessly. You get your report effortlessly when you have done all that you need to do in terms of setting up the software, setting up all your chart of account, putting all your bank account, posting all your transactions to date, and you get all your reports, which you can use for decision making any day, any time. So if you have any question, I will give you room to ask your question. Caleb.
Sir.
I'm with you.
Okay, so my question is this. When you were searching for all the ledgers, I was trying to search for my own end, but I could not see the place that you search for all the ledgers.
Okay, so let me come back here again. When you want to go to your chart of accounts, you come to accountant under this menu, accountant, click on it. When you click on it, it will drop down other sub menus under the accountant. You come here, chart of accounts, click on it. So when you click on it, so these are all the ledgers. We call it chart of account. It's also the ledger, general ledgers. So can you see it now? Can you see how you get there from your menu? Look at all the menu: home, item, inventory, sales, purchase, this. Come to what? Accountant. Click on the accountant, and under the accountant, you see your chart of account. That's where your ledgers are. Does that satisfy your questions, or there are still other questions?
Yes, sir. That's very satisfactory, sir. Thank you very much, sir.
Thank you, Caleb. So, Lekon, the floor is open for you. Is it still on the training?
No, I don't think it's on the course, sir.
But it's showing here. Oh, wait. Let me unmute him. I think I mute him. Yeah, I unmute him. Yeah, Lekon. Oh, maybe he's not on call, but it's showing that he's on call. It's showing that he's here. Okay, that's fine. That's fine. No problem. So I will drop this on our YouTube channel, Tosjohn Consulting, right? Do well to watch it again, share it, with other people that might need skills, information like this, accounting software training. When you share it, some of them might need a one-on-one training, a corporate training. They might need our service, right? And you know what we do at Tosjohn Consulting? We help businesses, we help individuals, right? To upskill, to stay compliant, do all our services. So when they go to our YouTube channel, they will be seeing all that we do there, and they can, reach out to us if they need any of our service. For students can also learn through all these YouTube video on all this training that we are also giving to you free of charge, right? So we are a responsible business organization, and we want as many people, right, to be covered within our business, right? If they are students, they can learn from our YouTube channels on all this accounting software, on accounting training and all of that. If there are businesses that need, to file all their taxes, accounting and all of that, they can reach out to us and we'll be able, to serve them. So we'll be dropping the curtain today on today's training. So by God's grace, God's sparing in our life, we also meet next week, to see how we can quickly round up on this accounting software. So I think we've been able to do like 5-6 training so far on this accounting software, and we are gradually coming to an end. So we've dropped one video on the YouTube channels, and then this will be another video. I think there was one that we recorded that we still need to drop on the channels, so you can go any day, anytime there to continue to watch, so that you can upskill yourself and be very strong to use accounting software when the need comes. So keep training, keep practicing for all the opportunities that have been given unto you to use the software. So feel free to use it for your own advantage, and you know that no knowledge is lost. You will need that knowledge one time or the other for your benefit and for benefit of other people, just like we are also giving you now. So I will drop the curtain here. So like I said, feel free to go and watch, and if there are any other questions, right, feel free to write it down. Maybe in the next training we'll attend to it. We might be looking at some 1 or 2 postings and then the report proper by next week. So if time allows, we'll finish up next week. But if not, there will be one more training, then we round up on the accounting software. So make sure that any question you have so far on this accounting software, bring it out. Practical question, bring it out. We'll attend to all of them, so that you'll be very strong and very skillful, and you know that you have really learned this accounting software and you can use it any day, anytime. So thank you very much for joining in today's training. Wish you a lovely week ahead. Thank you.
Thank you, sir.
You're welcome, Kelly. Have a good day. Bye.